Hello everyone and welcome to this daily market update where I share with you high probability trades based on technical analysis and on methods I've developed and I've used during the last 4 years. So today I'm going to show you a high probability trade that might um, give you, an opportunity to sell the market, but we are in an uptrend. So in order to sell this market, you have to be very careful, okay? Because I've predicted that market would go up, but right now, what I'm looking at, let me go to the 4 hour, okay? So right now, what you can do, you can have a small sell if you want to trade. I mean, if you want to take a trade, you can have a sell. I mean, as soon as markets open, there is an opportunity to sell. But as I said, we are still a long way to go. I mean, to reach, or to close the gap. Okay, so we're still almost 300 points to close the gap. So you have to be very careful because this seems to be bullish to me. But if you are a day trader, and you know how to, I mean, I'm going to show you now, right now. So if you know how to sell, how to trade, and if you were just looking for an opportunity, there could be an opportunity here. Why? Because markets are overextended. Okay, I mean, there is an overextension of the markets. I will show you what I mean by that. So here we have a channel. So if price would move, would have, like a regular move, I mean, to the upside, it would just follow the channel. But as you can see, price has left the channel long time ago. Okay, so it has really left the channel because of the aggressiveness of the breakout of this triangle that I have predicted. Like I predicted, and I had this scenario, explained in another video before this one. And even though people were saying that, oh, you can't be bullish because in this because of the economy, and we do just technical analysis, and there are many billionaire or multi-millionaire traders that just use technical analysis to trade. They don't listen to the news. They don't listen to the fear mongers, like in the news, that are just saying, that are just, uh, giving you wrong information about what's going on, really. Because people who is putting this money, the market, they are, I mean, peoples and institutions and big players that are, betting on the markets. So they are betting on these markets. You can see it clearly, and also without knowing this, just by doing simple and precise technical analysis, you'll be able to come with to come with this conclusion. It's not hard, like it's not hard. I mean, you need to have experience, but it's not hard to understand that this market was bullish. Like you had an indication that the markets are bullish. Right now we are in a very hard spot. Why? Because we are overextended. This is the first thing. And secondly, we have a gap. Okay, so we have two contra, I mean, two hints, but the two hints are contradicting each other, because the gap tells you that, like price is going to fill that gap. And the second thing is that like this kind of like market is overextended, so how can you trade this to the downside? So if you don't want to trade it to the downside, you can just wait for price, like to retest the channel. You have the channel, so it's going to be around 11,000. So 11,000, if price comes back to the 11,000 level or 10,900 and makes like a double, like here I will draw it, and price would just comes down and makes a double, like a double bottom here, you can start looking for a buy, especially if we break again, like if we break again to the upside. So you can look for a continuation, but you have to be careful because price could continue, like higher. So I will show you how to trade to the downside. So I'll show you how to trade to the downside. Just 1 second. I'm just going to delete this. So I'm just going to delete this. So as you can see here, I show you what I mean by just showing you, like what happened here. So you need to have this, okay? So you need to look for this kind of shape, okay? So these kinds of candles. Let me put it bigger. So anyways, so you see, you have to look for, like for a flag, and the flag should be at, it should be let's see, it should be, like right at the bottom of like it should be at the bottom of, like the lower value that closed, like on that double top, okay? So this is what you should look for. So here we didn't do it yet, we didn't have it yet. So here we have the lowest value of the the double top. So it's almost, like 11,100. Okay, so it's 11,100, which is, like a which is like a psychological level. 100, like, because psychological levels are 50s and 100s. So this is a psychological level. So price should react, like we should have some kind of reaction at this level, and if price closes below it, you can look for a sell. Like it's not going to be a very big sell, but you can make, like 20 to 30 points, which is, like for a day trader, which is a lot for a day trader. Anyways, so you have it. Of course, like the trend is bullish, so for those that want to wait, you have to wait until price, like reaches this area before even deciding to buy again. Okay, so price should be here inside this area before, like you decide to buy, if you want, like to buy for, for the long run, or even if you are doing day trading but you don't want to sell because the market is bullish. But as I said, market is overextended, so you have an opportunity to sell. Okay, so I'll be back tomorrow with more videos, and I thank you for watching, and I'll talk to you very soon. Good luck.